Hey everyone, it's Matt with EquiPredict Analytics. Thanks so much for tuning back in. I'm sorry it's been so long since I posted, but we had someone reach out to us asking us about identifying entry points when you're taking on a long position or a short position. So in this video, we're going to be covering the difference between your taking a buy signal and a buy trigger. Very important to understand the difference between the two. And we're going to be using the 1 3/4 times leveraged ETF TSLR. That's for Tesla. That's a leveraged ETF for Tesla. And we're going to be using two time frames, the daily and the hourly, taking our signals off of the daily and our entries off of the hourly. So just briefly, again, if you're enjoying some of the content we're providing here, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a whole bunch of information over there regarding market forecasting. And for our readers, we do send out to a quarterly EquiPredict forecast, as well as a couple occasional market alerts as well. So it's EquiPredict.com. So let me just shrink myself down to size here so you can see the screen. And I'm going to pull up the charts right here for you. So you can actually see on the left-hand side, we've got the daily chart of TSLR. On the hourly, we've got on the right-hand side, we have the hourly. I haven't pulled that forward just yet because what we're going to be doing is we've actually gone back in time to when TSLR started trading, which was August of 2023. Now, I haven't studied precisely what's going to happen. I just understand, I know kind of generally speaking what's happened with TSLR and Tesla since then, but I don't recall exactly what's going to happen and unfold. So we're going to actually go through it together, and I'll kind of go through the hourly and pick our triggers in the hourly and get our signals again from the daily. So I'll explain what that means. Up on the top screen here, we've got three indicators we're going to be using. We have on the top, we have a comparison ratio between Tesla or TSLR and the general stock market. So we're going to be using SPY, the ETF, SPY ETF, as the denominator. So a lot of different platforms allow you to use a comparison ratio. And what that tells you is that as this ratio is rising, so TSLR over SPY in this particular case, as it's rising, not only you can see down below that the price of TSLR is rising, but it also means that this indicator up here tells you that it's outperforming the stock market as well in our particular case. So you want that line rising. If it's falling, it tells you that not only, well, in this particular case, the price is falling. It doesn't always have to fall, but it is underperforming the market. All right, so when it rises, it's outperforming. When it's falling, it's underperforming the stock market. Down below that, we also have a proprietary momentum indicator that's tied to the comparison, the performance comparison ratio. There's so many different indicators that you can use out there. My recommendation is to master one or two and get really comfortable with them. Don't use more than two in your particular charting journey. I think it's a mistake to use too many charts. And then too many indicators, excuse me. And then we also have below an 18-period moving average. In this particular case, it's an 18-day. We also have it lined up on the hourly as well, which I'll get to in a second. But if you've watched any of the prior videos here on the channel, you can actually, you'll see that what we like to see is this particular line, the 18-period moving average, heading in the northeasterly direction. So we want to see it pointing more towards the right, top right-hand part of the screen. It adds to the evidence that the bullish momentum in a particular stock has taken hold. So what we're doing is we're looking for buy signals first. So forget in your mind just for a moment triggers. We're just looking for buy signals. It doesn't mean you're going to go ahead and enter, because you always want to take your signals from the indicators and your triggers, in our opinion, from the price action. You never want to take your triggers from the indicators alone. They are only adding weight and evidence to what you're actually seeing in the price action. I hope that makes sense. So what I like to do first is I like to draw a trend line on the indicators. I'm looking for a buy signal to be harvested from the indicators before I even get down to the price action. So in this particular case, we're just going to go ahead and draw a plank off the peaks of this. And what you're going to see is that I like to see 3 touch points on any particular indicator before I can see a divergence happen or something similar. But I like to draw sort of a 45-degree if possible angle. No steeper. If it's too steep, you end up with getting whipsaws like here, where the price just end up falling back down. What we want to see is sort of a gentle sloping line over the indicator to go ahead and tell us, to go ahead and give us that signal. So here's one peak over here, a second, and let me just kind of fast forward a little bit here, and you're actually going to be able to see that if we connect these two peaks and draw this line, you're going to see that a buy signal has been triggered here, right here on, it looks like November 7th, 2023 for this particular stock, for TSLR. Now, what you'll see is that the price is still pretty bearish looking. All right, so we have a buy signal, but we don't have a trigger yet. There's nothing that tells us that this looks healthy enough to go ahead and take a long position. If I just use the indicator up here, if I draw a line here, well, we don't have any kind of signal. There's no change in trend for the underperformance of TSLR in comparison to the stock market. So we're just going to kind of sit and wait. But what we want to do is, since we've taken a buy signal now here on November 7th, again, we've popped above this downtrend line. The momentum has popped above it. We want to go ahead now and hop down to the daily. All right, so again, we've gone back in time. We're trying not to cheat here, but we're going to go ahead and zoom. We're going to push the chart forward to November 7th. Oops, right about here. Okay, so here we are, November 7th. So what we want to do is now we want to find our trigger. So we have the buy signal. The green light has been turned on, if you will. Let's put it this way. Putting on a drag strip, you've got red lights on the pole. All right, the red lights are there. Then you get a yellow light, which is probably your buy signal. You want a couple yellow lights to trigger, meaning a buy signal, and then you want your green light to go ahead and trigger you in. So we're looking for that green light for a trigger in. And so for us, that's, again, pop up of the price action, 18 period moving average, or closing above the 18 period moving average. So we're looking for that trigger. The buy signal is still on as we travel forward. Okay, it's actually, if you look forward onto the 10th, you can actually see the price action, the price momentum is actually gaining because it's actually starting to rise a bit. So we're here on the 8th, the 9th, and then what we want to do is, obviously, we have a pop up and a gap up in price. Now, this is a point in time where we have a trigger for entry. However, one thing to note is that Wall Street, just after a few hours, they know everyone's going to pile in because we have a gap up, a pop up in price. Everyone is now starting to flood into this particular equity because there's been a gap up. So we are triggered in, but understand that a couple things are likely going to happen, especially with the high frequency trading firms, the institutional trading. They're going to try to bring everyone's stops out. So if you set stops now, maybe just, I don't know, right at the top of this price action, the computers, the high frequency trading firms, they know this is where your stops are. And so this has popped up. You can go ahead and hang on and just understand that you might end up getting below. This is around $22 per share. It's going to likely at some point in time come down below that. So you want to set your stops, trailing stops, far enough away from the market down here, maybe even closer to 18 or 17.50 or 60 per share to avoid being stopped out prematurely. So we're going to walk forward. We're in the position, and you can actually see it's so far looking pretty choppy. So look on the right-hand corner of the screen here. Again, we're not fast forwarding just yet because we're operating down here on the hourly time frame for this. All right, so you can see it's jumping around quite a bit. Doesn't look that healthy. This gap technically has been filled here. All right, you can actually see the price did come back down and test that gap here on the 17th of November. We're going to keep going. We're going to hang on. And as it pops up like this, what I like to do is then head back over to the indicators in the hourly. I like to see kind of what's happening. You can actually see there's some bearish divergence happening. Let me show you what I mean. So price is making a higher high here. I'm going to draw that in. And then the momentum indicator here in the middle is actually making a lower high. So that's a bearish divergence telling you that momentum to the downside might be in store. We just want to be cognizant of that. I would definitely be raising stops at this particular point in time. So price started to fall back down again. And you might can see it. It's going to probably go ahead and fill back down here again. I think that's likely what's going to happen. And there you go. So it's starting to fall back down. Now, when that happens, again, if you've had your stops far enough away from the market, you're likely to say, I'm just going to go ahead and hang on and see how this is going to ride out. Or maybe you took your profits up here and you're going to see how this is going to pan out. As you can see, it actually jumped right back up, and again, you're off to the races. You're continuing to go. So what I want to do is fast forward now. Again, we're just talking about taking long position. I want to fast forward now a little further in time to when price starts to break down. So I can already see that it's likely to start happening anyway, because you'll see that price is sort of traveling sideways, and actually we have another bearish divergence happening here in the performance indicator. Oh, now it's starting to resolve itself. Let's see here. So what I'm doing is on this hourly, I'm looking at all three indicators as time goes on, and the momentum of the performance is actually waning. That's a little concerning. What I mean by that, let me just see here if you can actually, I'm just going to kind of highlight what's happening. You can see these peaks are not really keeping up with the performance that you see on the above, and the price is rising, but the momentum of the performance is actually kind of waning. So just want to be aware of that. So it's starting to break down now, the price action. Let's see how far it goes. Okay, so we're starting to break down below 23.84 per share. Let's see if it goes down further. I think it might. Okay, so we're down to 24. So at this particular point in time, I would be looking for I'd be hopping back up. I'd likely be out of the position at this particular point, had taken my profits earlier, and I'm looking for my next buy signal back on the daily. So here we are on January 5th. Let me just forward the chart closer to January 5th and see what's happening there. All right, so here we are in 2024, January 5th. I'd be watching at this particular point in time for some type of buy signal. So what's happened now is the price is breaking down. So again, we're going to switch our minds back over to the daily. We're going to be looking for buy signals on the daily chart. So I'm going to get I'm going to sort of just keep forwarding here to see what's happening. And we are starting to see one here actually. So again, with this kind of charting, you only have to stop in and check your positions or that you're going to be entering once a day, once every couple of days, because what you can see is here, another bullish divergence is starting to form. Price has been falling. All right. The momentum indicator for the performance has actually been rising. Sorry if it's a bit small, but you can actually see that that's a bullish buy signal. This has not broken its downtrend just yet, the performance. So, but right now things are looking like we might have a trigger at some point. I don't know if I'd hop just yet down to the hourly, but we're going to go ahead and fast forward just a little bit here and see what happens. All right, so price is breaking down further. Okay, 18 period was slanting downwards quite violently. This divergence here was not that impressive. I mean, it was a bullish divergence, but it really wasn't a super strong buy signal. We're looking for a strong buy signal. So let me just fast forward a bit more. All right. Trend line, if I just used price action, all right, trend line's actually been broken here on February 7th, 2024. And although price was falling, we have a nice bullish divergence happening here. And you can extend this trend line from earlier, and you're going to see you have a buy signal here. So you have 2 buy signals, and you can argue that you have a trigger here on the 6th or 7th of February. Let's just hop down to the hourly. We're going to be looking for a trigger or confirmation that this is worth entering. So we're going to fast forward to February 7th. This is the last one we'll do for now. February, here we are. Okay. So you can see price action has been traveling, but if you actually look on the hourly, we have some really nice bullish divergence taking place in the momentum here. Okay. Not yet really here. Maybe you can argue there's a trend line break. If it's a 45-degree angle, it's pretty subjective. But we're looking for something that tells us this is worth going long. All right, so this is starting to pick up. So price is picking up. Outperformance is taking place. All right, nothing yet. We really want to be getting above $16 per share in this particular case. All right. So here we are. We've risen above $16 per share. Is it a really clean, solid breakout? Not too bad. Price performance has taken off in the hourly. We've got a nice momentum rise here, indicating this is very strong. And then we have a breakout, looks like above, and the 18 period is moving up. So in this particular case, we want to go ahead and take on a long entry and see what happens. A little bit choppy, but there you go. It is rising. Oh. So stops are being taken out at this particular point in time. So I hope that sort of makes sense. You want to be taking your buy signals from the daily chart, and you want to be looking for your triggers for entry on the hourly. And as you get into your trigger, as you take on your position in the hourly charts, you want to make sure that you have your stops set far enough away from the market, because the higher frequency trading firms are going to go ahead and take those out, or have trailing stops in place. Like in this particular example, if you took your entry around $16 per share, and you had tight trailing stops, you can get out for $17 a share only a few days later. So I hope that all helps you with some of your trading and understanding the difference between taking a buy signal and a buy trigger. So again, it's Matt with EquiPredict Analytics. Happy trading, and do be careful out there.